Hi everyone and welcome to the Everyman Investor. This week I was rather light on economic data, so basically just a couple of calls that caught my attention. So the first one was the Fed chair versus the S&P 500, and the second one was an analyst versus Tesla. So let's dive into it. So as you can see, Jerome Powell, who is the Fed chair, is not confident that the Federal Reserve has done enough to bring down inflation, and that they will not hesitate to raise rates again if necessary. But at the same time, he acknowledges there is a risk of raising rates too high. Now, this was on November 9th, as you can see from this CNBC article. And as you can see, on November 9th, the stock market dropped quite a bit. It has recovered quite a bit since, but that shows how sensitive the market is to any comments from the Federal Reserve about interest rates. As you can recall, interest rates affect treasury yields, affect bond yields, and affects the equity risk premium. So this is something that we have to keep in mind as the Federal Reserve's policy stance ahead is rather murky. Now, a second very interesting call was from an analyst from HSBC, which basically said that Tesla is just a car company and that it's overvalued and that you should sell the stock. Now, as I mentioned previously, analysts actually sort of pick up their numbers from anywhere and come up with calls about what the share price should be and whether you should buy it or sell based on, I'm not sure where exactly they get it from, but I would say a crystal ball. So let's have a look at how Tesla shares did subsequently. So Tesla shares actually dropped quite a bit over the past week or so. The thing is, if you look at it, Tesla actually has a PE ratio of 69.17. Now, as a pure vehicle manufacturing company, the largest vehicle manufacturing company, which is Toyota, has got a P ratio of 10 or slightly less than 10 versus 7 times the valuation of Tesla. Now, if you're a Tesla bull, you will be saying that Tesla is actually a tech company that is masquerading as a car company. If you're a Tesla bear, then basically Tesla is just a normal vehicle manufacturing company that had a first mover advantage with regard to EVs that is now losing. Tesla has been cutting prices in order to generate demand. So the question is, which you are, a bear or a bull? Now, for me, I haven't touched Tesla shares ever, for the simple reason I think the CEO is much too unpredictable to be able to provide predictable trajectory for how the company is going, and markets in general like predictability. Now, I do admit that he is somewhat of an innovator, and he has done quite a bit in terms of innovation. In fact, he has just unleashed his new chatbot onto the world. The question is whether or not this will translate into earnings for Tesla. If it doesn't, then I would agree with the analyst that Tesla is basically just a normal car company. If it does, then how would that basically provide extra profits for Tesla, given that Tesla is just cutting prices non-stop over the past few months? So just interesting comments about the past week or so about how the Fed chair can affect the markets and how analysts, just a single analyst actually, can affect a share price of a stock. So if you do have stocks that you're interested to own, sometimes the analyst call can be a great boon for you in the sense that it will cause the share price to drop and bring it down to a value that you might want to pick it up at. At the same time, it is also something that I would say take it with a pinch of salt, but look at the financials and the basic business of the company itself and decide for yourself what exactly a company is and how it should be valued. So thank you for watching, and I hope this was interesting.